You know, one of the ways that you make money as an investor is to take advantage of situations where you have a mispricing of assets. Because if the market perceives, let's say, a stock to be worth more than you know it is, that there's something flawed in their analysis and it's causing the market to overprice an asset, that gives you an opportunity to make money by selling that asset. Same thing as a buyer. If the market fails to assign an appropriate value to a particular stock, if you believe that the market is wrong and that the stock is worth a lot more than what the current market price would indicate, well, now you have an opportunity to take advantage of that misperception because you could buy the stock at a much lower price than what you know the stock is worth. Well, I think that is exactly what's happening right now on a much broader scale, because all sorts of asset classes entirely, not just individual companies, extremely mispriced because the market really has no idea what's about to happen and how it's going to impact the value of those assets. You know, it reminds me a lot of the subprime mortgage bubble, because early in that bubble, you know, 2004, 2005, 2006, it was apparent to me that the market had mispriced these bonds, that the bonds were trading actually above par, when in my opinion, they were worth zero. I understood the dynamics behind these securities and the housing market, which ultimately was how these securities derive their value. I knew that when real estate prices dropped, and that a drop was inevitable, but that was something that buyers of mortgages couldn't even conceive was a possibility. I knew that when prices dropped, there would be a wave of defaults and that these securities would ultimately be worthless. And that created an opportunity to short them. And there were several other investors who achieved a degree of fame and fortune by coming to the same conclusion. But the reason that people were able to sell these mortgages that were basically worthless and sell them at above par was because the vast majority of investors were clueless as to what was actually going on. And it's those same clueless investors that are now overpaying for U.S. bonds, for the U.S. dollar, for U.S. stocks, and who are undervaluing things like gold and silver and maybe emerging markets and value and dividend-paying stocks relative to growth stocks. Going back to the beginning, for years, the Federal Reserve told us, the public investors, that the problem was inflation was too low, that the Fed had decided that 2% inflation was its target. It was no longer a ceiling where inflation had to be below 2%, which is where the 2% even came from. The Fed decided to redefine that ceiling as a target, and the Fed told us that we needed 2% inflation, that anything less was unacceptable, that somehow if the cost of living did not rise by 2% every year, it was bad for the economy. That if the cost of living only went up 1.5%, that was a problem. The problem that the Fed was going to solve by making sure that the cost of living went up by 2% per year. And the way the Fed was going to deliver on that promise was through monetary policy. So the Fed kept interest rates at zero, and they continued quantitative easing because inflation was still below this target that they decided was somehow the economic sweet spot when it comes to inflation. That we need to accept a 2% increase in the annual cost of living because anything else could be economic disaster. So the Fed pursued this policy. Then, when the Fed actually achieved its goal, when inflation started to come out at 2% or even slightly above, the Fed did not declare victory. No, the Fed said it still had more work to do, because the Fed said that even though we're at 2% inflation now, that's not good enough. We need to make up for all the years that inflation was below 2%. So that's when the Fed all of a sudden redefined its 2% target to a 2% average. The Fed said that inflation must average 2% over time. And because we had so many years below 2%, well, now we need to have years above 2% to average all that low inflation back up to 2%. Now, of course, all this was nonsense from the very beginning. I said that it was nonsense that the Fed claimed that we needed 2% inflation, that 2% inflation was not better than 1% inflation. Actually, the opposite. 1% is better than 2%, and 0 is better than 1%, and minus 1% is better than positive 1%. When it comes to the cost of living, the lower the better. If the cost of living goes down, that means the standard of living goes up. So it was nonsense that the Fed said we needed more inflation. And it was even more nonsense when the Fed said we needed to make up for the fact that we didn't have enough inflation in the past by having more inflation in the future. Now, why did the Fed make this stuff up? Well, they wanted to justify the monetary policy and pretend that there was some kind of benevolent purpose to what they were doing. There was not. The sole reason that the Fed continued to print money and keep interest rates at 1% was to sustain the bubble that it had inflated, both in the economy and in financial markets, and also to sustain the U.S. government, which, thanks to the Fed, had taken on so much debt that the only way the Fed could service that debt is the only way the Treasury could service that debt is if the Federal Reserve kept interest rates as low as possible, which was 0, and continued to buy a lot of the debt that the Treasury was selling. So they continued these policies not because it benefited the public, it actually hurt the public. It benefited the government in their ability to deceive the public, and it had benefited investors because the policy propped up asset prices. So if you owned a lot of stocks or real estate, you benefited from having those prices artificially high and the ability to borrow against those appreciated assets at artificially low interest rates. After the inflation rate was not just slightly above 2%, when it was double 2%, when it was triple 2%, now the Fed had to address the inflation problem because it was no longer just slightly above 2%. So the way the Fed initially addressed the inflation problem was it dismissed it. It attributed the factors causing the price increases to the reopening of the economy, the pandemic, to Putin, and the Fed assured everybody that there was nothing to worry about, that the high inflation that we were experiencing was just transitory. It was all going to go away on its own. And so the Fed didn't have to do anything. It could keep on printing money, quantitative easing, it could keep rates at 0 because the inflation problem was going to solve itself. It was not until high inflation persisted, and in fact, we ended up getting numbers that were 4 times the 2% target, and now the public was so upset about inflation. Joe Biden's approval ratings had tanked mainly because of inflation. And so inflation became such a big political problem that the Fed could no longer pretend the problem didn't exist. And so it finally came out and admitted that inflation wasn't transitory and that it was going to get rid of it. But the problem is inflation is not going to go away. Inflation is here to stay. The inflation that we're experiencing today is not simply the consequence of reckless monetary policy since the COVID pandemic. Now, the COVID pandemic added fuel to the fire, and I was very critical of this policy mistake when the Fed first made it back in March of 2020. I was one of the few people that accurately forecast that the pandemic was inflationary, not deflationary, because the pandemic was resulting in a reduction in supply. The proper monetary policy response would have been to reduce money supply so that prices would stay stable. But instead, the Fed did the opposite. It expanded money supply, therefore increasing demand as the markets were reducing supply. Now, a lot of the supply reduction was due to government mandates that forced businesses to close and workers to stay home. So the government ordered a reduction in supply. At the same time, the Federal Reserve delivered a huge increase in demand. In fact, people who used to be on the job making stuff were now at home collecting unemployment benefits that exceeded what they used to earn. So they weren't producing, but they were consuming, or at least trying to consume. And so this was a perfect storm for massive inflation, and I warned about that.